single day. I'm gonna make something great. That's my way.
Hi everybody. I am Ginger Wolf and welcome Stripped Finance. This video is for informational and entertainment purposes only. I am a feature entertainer and stripper, not a financial consultant. Please speak to your financial advisor about any financial matters. And with that out of the way, let's get into the video. Topic: 10 Personal Finance Basics. No doubt that money is an important factor in everyone's life. The absence of financial awareness and planning has a negative impact on youngsters. Financial troubles may be overcome easily by returning to personal economic principles, including how to create a spending plan or even the correct approach to paying off loans. But unfortunately, these methods are not taught anywhere in schools or higher education. Financial Industry Regulatory Authority, FINRA, those who accurately responded to 3 financial education can benefit you in many ways. According to a study released in 2021 by the main questions assessing primary financial education were much less inclined to be financially concerned or nervous. Here are 10 financial planning principles that will teach you how to become more disciplined about your cash. How will you be less financially stressed? How to achieve your chances of success. Definition of personal finance. The concept that refers to money management and long-term budgeting is personal finance. That includes investing, taxes, and future planning. Financial planning is also about achieving personal financial desires. This includes long-term and short-term goals like going somewhere on a family trip or saving money for your child's higher education or future. Top 10 Basics of Personal Finance. 1. Budgeting is your friend. Budgeting and understanding how and where to balance your debit card are crucial to success. Keep your monthly budget plan because this is quite important. If your expenses are beyond your monthly budget, this might result in overdraft charges and prevent you from reaching your goals. Suppose you want to prevent your extra charges. In that case, the best option is to look over financial accounts repeatedly. Making a list of your average monthly spending might help you get an excellent grip on your budget quickly. Once you know your budget, you can determine what increases or decreases your budget. In that way, you can save money for your future. If you're not operating beyond your limitations or want to save more money, going over your current plan and searching for ways you significantly cut expenditures is an excellent place to start. You might also think about ways to boost your earnings, including getting a raise or establishing a home-based side business. Building an emergency fund. You never know whenever your car might break or even when you have to go to the hospital for an illness. You fear piling up high debt or failing on your expenses if you will not have funds set aside for whatever life has thrown at you. To prevent yourself from such a situation, you need to save some money for your future. According to a famous general rule, a few months of essential living expenditures should be placed away in a personal bank account. It's a good reason to place your money into a savings account in which you can make investments while still having quick access to it if you need it. Rising savings, internet, and no-fee bank accounts are all viable opportunities. Avoiding a credit card balance. Once you have a debit card, it's easy to go overboard and charge more than you could ever manage. However, maintaining a debt from month to month helps make such expenditures much costlier than when you first made them. The debit cards carry several highest interest, typically exceeding 16%. As a reason, a minor charge spread out over many weeks might proliferate into a considerably more significant amount. If your expenses are much higher than average, there is no need to worry, as many other methods can help you overcome your budget. Paying your bills on time. Late payment penalties will be applied if the bills or the rent are not paid on the due time. Your credit will default and be sent to agencies if you postpone payment for an extended period. Your late payments contribute to 35% of your credit rating. A record of late rent-paying bills can have a significant negative impact on your credit score. With a low credit score, taking out a loan can be challenging, and the ones you obtain are likely to generate higher borrowing costs. If you want to pay the bills on time, the best options can be: make a list of your respective due dates and invoices. setting up regular payment when available, signing up for notifications. All these preferred methods can help you avoid missing a payment deadline. Starting early to save for retirement. When you are young, you can't imagine retirement soon. Aging can seem distant away. However, plan for your future by saving money aside from a young age. It can give you additional opportunities that can save, allowing you to extend your earnings throughout your lifetime. The potential of interest compounding is the strongest motivation to get started as soon as possible. Low funds might rise significantly. If you have a career retirement plan, including a 401k, you should contribute, remarkably if your employer matches your payments. You should save early or start planning for your future savings as soon as possible. Investing. You might not be concerned about your future when you are earning. You might be thinking that what you are making is enough for your life. But once you stop earning, you will not have enough money set aside for retirement to live a comfortable life once. Furthermore, there might be some activities you desire to be rich enough to afford later in life, but just before retiring. For instance, if you have a family and especially kids. You might like to join the 529 strategies to save for the fee of your child's higher education. You might also want to invest somewhere else for future savings. To invest money, select a financial institution you want to work with. You can then invest in a managed fund or a marketplace product, and you can choose your stocks if you're willing to do some study. But, while investing, keep in mind that investment can be risky if you don't know where and what you are supporting. So before investing, make sure you are educated enough in this field and have proper guidance. Taking help from the experts can help you in becoming a better investor. Getting insured. It can sometimes be wise to plan for the worst situation whenever it comes to finances. There are several ways of getting insured. Intelligent planning can help to make sure you secure medical and automobile insurance. A home insurance option is also available if you want to insure your property and valuables. An insurance plan for the long term is reasonably necessary. If you have a family, kids, or anyone dependent on you financially, then no doubt that an insurance plan can benefit you. Employees working in different companies can have such facilities. Employees who may not have that choice can go personally to an insurance company, dealer, or agency. Taking advantage of credit card rewards. Having a good credit history is a benefit because you can fulfill your desires. One of the advantages is that you might consider applying for a prepaid debit card that will earn either travel miles or money rewards on your expenditures. If you love traveling and it is a primary concern for you, you must search for a bank card with flexibility travel benefits that can be used on various significant airlines. You should search for a MasterCard that will benefit you and gives you a big sign-up bonus if you purchase a specified amount during the first few months. It would also be nice if there were no annual cost. Checking your credit card report regularly. Checking your credit reports regularly is a great idea. AnnualCreditReport.com allows you to obtain a free credit report from the 3 major credit bureaus agencies, including Equifax, Experian, and TransUnion. However, in the past, one was allowed to check credit reports once a year, but due to the pandemic named COVID-19, the 3 credit bureaus are now providing free credit report screenings every week. It's a good idea to regularly obtain a duplicate of your record and afterward examine it for any irregularities or evidence of dishonesty. If you notice anything suspicious regarding your card or account, you must inform the credit agency or anyone who provides you with your card for the proper investigation. Monitoring your credit record can help you in detecting fraud. Immediately dealing with fraud. Ensuring that your credit report is free of inaccuracies that could harm your credit score. Choosing your bank account wisely. Finding an appropriate place for your financial need is essential. Since there are so many financial institutions to choose from, it's a good idea to purchase around to ensure you select one that truly meets your needs. Among the options are a classic financial institution. These usually have geographical locations across the country and provide various financial products and expertise. Credit union. A credit union is an economic cooperation. These are non-profit organizations that are controlled by the government's membership. They're comparable to traditional banks, except they demand memberships and have fewer members in branches. In comparison to a regular bank, they may well have reduced costs and a higher interest rate. Online bank. There are usually no physical locations for these organizations, it's all done online. As a result, their charges and rate of interest are generally shallow. If you want to manage your account from home and within your comfort zone, online banking is a far better idea. Choosing a bank is not that easy. You need to do proper research about the selected bank. The preferred method is to do research first. When selecting a bank, Insured offers a user-friendly web application and easily situated ATMs that don't cost you a fee to withdraw your funds. Personal finance rules to know. You may begin to think about specific general guidelines that can allow you to make sound investment decisions when you've created some basic practices. The following are 3 laws to remember. It will help if you keep your goals and desires in mind. Learn to tell the difference between wants and needs. Always keep hold of yourself first. It is difficult to do hard work if you don't have goals. Before doing something, must set a plan for yourself. If you have dreams, you will be able to save and invest money. Through your goals, you can motivate yourself to do much better. Secondly, you must know the difference between your needs and desires. These 2 ideas have the potential to wreck your financial affairs. Eating, clothes, housing, medical services, and dependable transit are necessities. All else is almost certainly a desire. This isn't to say you don't have desires, but it's crucial not to risk your financial stability in chasing them. According to The Rich Man in Babylon, you should save 10% of your income for your future self. It means taking a small portion of your every paycheck and investing it toward your long-term priorities right now. Automated billing contributions to a bank account can limit the urge to spend now and save later. Conclusion. Becoming successful with finance demands fundamental abilities that many people just weren't taught in college. It is not too late to learn about financial management, luckily. Choosing a good bank, checking your credit record, and investing in saving for the future are crucial for achieving your goals and increasing financial wealth.
Hi guys, so the effect of gravity seems to be having a really weird kind of like effect on me here. So don't forget to like, comment, share, and subscribe while I go figure this out. Bye!